Thank you very much for making a date on today's edition of the Marketplace, and welcome back. Now to the very first story. Passengers have started paying for the 10% increase in transport fares as they commute to their various destinations. This follows the decision by government to approve this margin of increase in fares for the various driver unions last week. The following report explores the impact on businesses and individuals. But how would this impact on your income and cost of living as well?
Adjustment would affect all categories of transport services by the various driver unions in the country, like intracity buses, popularly known as trotro, intercity long buses, and shared taxis. So if you patronize a shared taxi to work, which was costing you about 5 cedis, 40 pesos, you now are required to pay 6 cedis. This would translate into 30 cedis for the week. For the intercity buses, popularly known as trotro, if you were paying 3 cedis, 50 pesos to work, you would now be paying 3 cedis, 90 pesos. So if you were spending about 17 cedis every week, your budget now stands at 20 cedis, translating into about 80 cedis a month. With this development, if there isn't any adjustment in your salary to make up for this increase, then there has to be some expenditure cuts to help deal with this challenge. This would obviously lead to marginal increase in the cost of living going up on the basis that other actors in the economy don't increase their prices as a result of this development. For some industries and businesses, it might be difficult to absorb this increase in transport fares, which would lead to cost of production going up, a development that will result in them passing on that cost to the consumer.
All right, so we'll be bringing to you some reactions from some business associations vis-a-vis GUTA and the AGI in our subsequent bulletins. Let's move on now to the capital market. And the Securities and Exchange Commission has indicated it could soon join the Bank of Ghana to take action against gold buying firm Men's Gold. This follows fresh revelations. The company's dealings could be likened to derivatives trading, which requires approval from the SEC. Now, there's more on what the capital markets regulator had to say on this development in the following report.
Minerals Commission and Lands Commission have all told Joy Business that the license given to Men's Gold only allows them to buy and export gold. However, checks by Joy Business indicates the company might be engaged in some sort of derivatives trading, which should be licensed by the capital market regulator, the Security and Exchange Commission. But its Director General, Reverend Daniel Lugbami, says it has not given the company its blessings.
No. Men's Gold doesn't have a license from SEC, and I think we have put out a notice to that effect because we had some people asking about Men's Gold, and we did say that they don't have a license from SEC. They have a license from, I believe, Minerals Commission. I don't think they have a license from the central bank. But as I can tell you that SEC hasn't issued any license to Men's Gold. And I also know that the operations are being looked at, and I believe at the right time the necessary directives will be given.
Now, this development could spell trouble for the firm, but Men's Gold, on the other hand, has insisted that they are not taking deposits as is being put out by the Bank of Ghana. Persons close to the company have maintained since Bank of Ghana gave the public warning, they have tried several times to engage Central Bank to get the issue resolved, but there has not been any response from the regulator.
Let's all stay a little longer on the capital markets. And Chief Executive of Databank, Databank, is optimistic of some exciting times for the stock market following MTN's initial public offering IPO. The telecoms giant is giving out 35% of its business to raise 3.47 billion Ghana cedis. It is believed that if MTN finally lists on the market, it would improve value of the stock exchange and also attract more firms. This is a view shared by the Databank boss, Databank.
Well, I'm at Databank. My research team tells me that it is a buy. So, I mean, we always have either sell, buy, hold. But the research team tells me it's a buy. And I really have faith and believe in my research team. So once they tell me it's a buy, it's a good buy. And it's good for the stock exchange. It's good for Ghana's economy. Our stock exchange has been too quiet for too long. And I'm extremely excited that such a giant like MTN has finally landed on the stock exchange. It's just that its market capitalization, I think, is going to be very, very huge. So once MTN sneezes on the market will shift. It will shake. It's just like what Safaricom does to the Kenya Stock Exchange. Once Safaricom sneezes, the whole market shakes. That's where I think I have a bit of an issue. But it's fine. I'm very happy about it.
What of the timing they are giving from 31st, from May to July?
I think it's long enough. It's probably even too long. I mean, if you're going to buy, you should be ready by now. They've announced that they were going to come to market more than a year ago. It's been a very long time. So I think it's more than enough time.
Indeed, some exciting times for the capital markets. Now, Ghana ranked third in the first edition of the African Sovereign Wealth Fund Index, polling 62%. The country came behind Nigeria and Rwanda, which were first and second in that order, with 62.49% and 62.24% respectively. There's more in this report.
The index, which was launched last Friday in Accra, examined the size, governance and disclosure, source of funding, as well as domestic investment mandates of sovereign wealth funds on the African continent. Ghana ranked third with an overall score of about 62%. The country beat countries like Angola with 56.57%, Morocco with 38.92%, and Gabon with 47.17%. Nigeria, however, stole the top spot with a score of 62.49%, followed by Rwanda in second place with a score of 62.24%. The report also examined the existing 12 sovereign wealth funds on the continent with total assets of $89 billion. Speaking to Joy Business, managing partner of Confidence Advisory Group, Michael Cotto, who put together the report, described Ghana's sovereign wealth funds as fairly young with more room for improvement.
And the three funds together are still fairly young compared to sovereign wealth funds from other parts of the world. But over the years, we have had an opportunity to look at their performance, how they've been managed, and how they've been utilized. The stabilization fund, for example, has been utilized a couple of times to support the budget when oil prices are falling. The point is that as a country, these strategic sovereign assets can serve a range of purposes. I think the important thing is to have dialogue and use the democratic process to build consensus around what we want as a country to utilize these funds for. The important thing is always to look at the strategic goals that define the mandate for these funds.
A sovereign wealth fund refers to a state-owned investment fund used for stabilization of the economy, for infrastructural development, and for savings for the future generations. Ghana's sovereign wealth fund consists of the Ghana Petroleum Funds, established in 2011 to target economic stabilization, infrastructural development, and savings for future generations. Currently, the country's sovereign wealth fund has accumulated about 875 million Ghana cedis.
All right, so time to turn our attention now to the oil and gas sector. And the Ghana National Petroleum Corporation, GNPC, last week entered into a 12-year agreement with Russian firm Rosneft for the supply of natural gas to Ghana. It is expected that the gas, which is 250 million standard cubic feet of gas per day, will be delivered by Rosneft and hopes to provide a competitive and secure source of fuel, supplying 25% of Ghana's overall power generating capacity. Now, this development has generated some criticisms from stakeholders of the energy sector, and to help us look at the situation is energy expert Kojo Puku, who joins us on phone for some analysis. Good afternoon, sir. Welcome to the marketplace.
Good afternoon, and good afternoon to your viewers.
Many thanks for your time. Now, is this a good move at this time, especially considering our total gas supply potential currently as a country?
No, it's not. This whole idea of going outside the country, especially GNPC, who partners almost all our offshore developers and knows the excess gas capacity that as a country we have coming into 2018, 2019, is mind-boggling why they would go and sign a 12-year agreement with a company in Russia to bring us gas that we already have excess of. Now, let me give you a background to all this. Okay. You remember some time ago, there was a projection that in the medium term, Ghana was to generate about 5,000 megawatts of power.
Sure.
Now, in that calculation of 5,000, to realize 5,000 megawatts of power, the technocrats decided that the short-term to medium-term gas available to us as a country would not be able to service this 5,000 megawatts projection. So that is when the FSRU floating storage and regasification unit then came about. And by the time this government came, the previous administration were looking at 3 different companies, Quantum, Sahara, and other companies, to provide this FSRU unit to basically regasify gas for Ghana. Going forward, what the politicians have not done is to reassess the situation 4 or 5 years down the line. As a country, we do not, and we no longer need, in the short to medium term, we don't need the FSRU to come in. Because if you look at Sankofa coming on stream, and you look at all the other gases that we have with the existing production that we have, the generation that we have in Ghana now is far below 2,500. And we have excess of generation that nobody is using. So as we speak, we have over 2,500 megawatts of power that we can't even use. So we have excess generation and nobody's using it. So for you to now go and bring in extra gas to come and generate more power, for who to use?
Now, could it be used as a backup measure just in case any of our generating capacities becomes problematic?
No, as we speak now, the existing gas we have in Ghana is enough for a backup power. You see, this floating unit, this LNG regasification thing, is only necessary if we are looking at that 5,000 megawatts which the Mahama administration projected, that in the medium term, Ghana wants to produce 5,000 and become a net exporter. But what the situation on the ground is that even if we bring in all these expensive fuel into our mix, now exporting these power becomes a problem because it's too expensive for our neighbors to buy. So in Ghana, as we speak, we have excess capacity.
Okay.
There are plants, there is gas, and nobody is off-taking those electricity that we have at present. So if GMPC now go and bring in, let's say in the next 2 years, GMPC brings in, in the next year, GMPC brings in this gas from Rosneft, from Russia. What power plant is it going to power? And those power that it generates, who's going to use that power? Because as we speak, we have excess capacity that we don't need as a nation. So let's even assume there's going to be industrialization. Industrialization is not going to be within 1 year where we will suddenly need 1,000 megawatts of power in the country. So the government should revisit this whole idea of FSRU and all these politicians going out of the country and signing contracts that we don't need.
Now, let's look at this aspect also, the cost implication. We have a standing order of supply of gas from N-Gas, that's Nigeria Gas. Now, that's also problematic because we owe them so much. Now, in the event of Nigeria Gas, or we pulling out of this, agreement with Nigeria or Nigeria Gas, could it be that we have cheaper gas from Russia to make up for that gas coming from N-Gas?
Well, at present, our gas supply, if you look at what we have in the country, you can take out the supply from N-Gas, and with Sankofa coming full stream, we don't need N-Gas. What we have in Ghana is infrastructure problem. To start with, we have energy security. We now built a lot of power plants, situated them in places that we've not planned. So most of our plants came to Tema without any direct gas supply to Tema. So most of our gas supply is to the western part of the country, which is the Takoradi area. So now they are supposed to design an infrastructure that will take the gas from the Takoradi enclave to the Tema enclave, so that the power plants like the like of Asokli that are situated in Tema would have some of the gas which is in our western part of the country. Now let me add, there is a private consortium. They are called Tema LNG. They have built a regasification plant, and they are already in business selling gas to some of these, the likes of Asogli. So already there is even a private investor that has come into the country and put up some of these infrastructure, which makes some of these old 3-4 years policy of having an FSRU are obsolete. So as far back as 2 years ago, some of us have been saying that, look, let's revisit this idea of FSRU and look at it as a long term, maybe look at it from 5 years from now, when maybe all our gas potential has come on stream and we still feel that there's a need to now bring LNG, then we can look at it. But for now, in the next medium term, we are not looking at that 5,000 megawatts that was projected. So I don't see the need for this excess gas coming in from Russia.
All right, now, the GNPC, according to the release last week, also stated that, the agreement is for some other reasons, which I believe is strategic. Is it feasible enough?
Well, you see, there was an agreement. There was an agreement with the past administration with Quantum. The present administration came and cancelled it and said they have signed a much better deal with Gazprom and they saved the country so much money. I don't know if you remember that publication.
Exactly. I do, yeah.
Exactly. So in following up that, because there was an agreement which is to do with this FSRU thing, they've cancelled one from Khartoum. They've now bring in Gazprom and other consortium that were going to do it. Gazprom thing didn't work, and they've now followed it through and brought in Rosneft. What I am trying to say is that the premise, the underlying argument, which even brought up all this Quantum Gazprom thing, does no longer exist. The FSRU thing that we talked of with 5,000 megawatts, Ghana, as we speak, there is a generation of 2,500 megawatts, our peak load, and we can't even take all of it. And even if now we have excess capacity with gas available to fire these plants and nobody to take the electricity. So the argument which was made for some of these policies has failed. The argument no longer holds. So the politicians taking this thing of, we cancelled Quantum, we brought in Gazprom because Gazprom is not there, we are bringing in another company. What I'm saying is that they should now go back to the drawing board and they will realize that we do not need this gas from Russia.
All right.
Now, for the next 5 years anyway.
All right, thank you very much, Kojo Poku, for your thoughts. And that was energy expert Kojo Poku sharing his thoughts on the current agreement where Ghana has signed an agreement with Russia to supply about 250 million standard cubic feet of gas per day, for power supply. And he's been sharing his thoughts on this particular issue. And we'll bring you some more thoughts later in our subsequent bulletins. But moving on, Director of Renewable Energy at the Council for Scientific and Industrial Research, Dr. Francis Boateng Ajinim, has called on government to create an enabling environment for implementation of the feed-in tariff scheme, which will reduce cost of solar energy for consumers. He made the call at a solar energy workshop organized by energy companies in Accra. It was to train PV installers to help integrate new techniques in their day-to-day activities.
The average Ghanaian is unable to adopt renewable energy technology in their homes and businesses because of the huge cost associated. The 4-day workshop saw service providers Tino Solutions train about 40 Ghanaian technicians in the installation of solar energy. Director of Renewable Energy at CSIR, Institute of Industrial Research, Dr. Francis Boateng Ajinim, called on government to create an enabling environment for the implementation of the feed-in tariff scheme, which would help reduce cost of solar energy for consumers.
It's all about the right policies. As of now, I think the renewable energy law make room for what we call feed-in tariff. That has not been implemented in Ghana. So if this is implemented, it has a consequence on the cost and also the uptake of solar. So the government can't do much. We have relied too much on the government. It can't do much. The only thing that the government can do is to create the enabling environment in terms of, say, the feed-in tariff implementation, and making sure that there is much education for the understanding of the solar concept.
On his part, CEO of Tino Solutions, Postune Dugle, noted his outfit has trained over 300 PV installers over the past 3 years.
So the whole idea is to provide the necessary skills to the technicians who will do in itself, provide quality assessment, quality installations to bring some level of confidence to customers and consumers. consistently, if you tally the numbers, we did close to 300 technicians so far, starting from 2015, like I mentioned earlier. We're given skills on basic solar sizing. When I mention solar sizing, it's the beginning of a good solar system. You need to understand what are the load profiles of every customer. This varies. House A, office A, always have different electrical components.
Hopefully, this will bring some development in the renewable energy space in the country. Fawzia Adam, Joy Business.
This is live on the marketplace, coming to you live on Joy News on the Multi-TV channel. Now, the Ghana cedi has started recording some sustained depreciation against the US dollar. Now, published quotes by some of the major banks have seen the cedi depreciated sharply to about 4 Ghana cedis 70 pesos as of last week. Now, what is driving this free fall? Now, the indefatigable George Riafe has joined me right here in the studio to tell us more about this. George, what is the reason behind this particular depreciation?
A lot of factors have been put forward depending on who you engage, but speaking to these big banks that are very active in this currency space, they are attributing it to the fact that most of these investors who bought into our local bonds are trying to get out and get back to the US because those bonds and those assets, they are offering quite higher returns to them, as well as the fact that our Euro bonds are also offering some good results or good returns, so they want to move into them. What happens practically is that these international investors or foreign investors bring in FX, bring in dollars to their local banks to purchase these bonds on their behalf. So what has happened is that there's a lot of requests on these commercial banks that they need their dollars to get out of the system. And what has happened is that there's some pressure on the limited amount of dollars in circulation. And that is why we are seeing that consistent free fall in the cedi's value over the last week. Even though the Bank of Ghana comes out with this rates, which is the average quote, most of these banks are quoting a far higher rates than what the Bank of Ghana is putting out. So even when you go to the Bank of Ghana website, you're seeing a 4 Ghana cedi 42 pesos. In terms of the actual transaction rates that these banks are putting out, that's far higher than that. You're looking at 4 cedis 70 pesos, 4 cedis 80 pesos, and even 90 pesos. So that is what is resulting in some sort of pressure on the cedi on the interbank market.
Should we be worried at this stage?
Yes, you should be worried, Riafe. You've seen the price of crude oil in the international market going up. It means that for that same quantity of crude that you need, if your cedi is not stable, you need more Ghana cedi to send to bring in the same volumes of crude. And that is why we have seen some marginal blips on the local front in terms of crude oil prices. Now, the prices have been fairly stable because our cedi in the past has been a little bit strong. So any sustained blip in the cedi's value could mean that prices of crude or prices of local pump prices will be going up significantly if we cannot hold what we are seeing right now. So, of course, you should be worried because it has an impact on prices of crude oil. And also, since we import a lot of what we consume, if I still need more Ghana cedis to bring the same quantity of mineral, of toffees, of oil, somebody has to take care of that cost.
That's not
and that could be passed on to you as a consumer.
What is the Bank of Ghana saying or responding to this situation?
Engaging these banks, the Bank of Ghana has really been on the market, but it looks like they came in a little bit late in terms of trying to pump in a little bit of dollars onto the market. If you look at their reserve position, very, very, very strong, but they came in a little bit late, so we are yet to really see that correction or that stability on the market as a result of what the Bank of Ghana has done over the past 3 days or 4 days in trying to hold the cedi free fall.
Now, with the current situation where crude prices are going up, we as an exporter of crude, are we not then also going to make some gains, which could, make up for the depreciation?
Yes, you could make some gains, but ask yourself, how are those monies being used? Does the law itself allows government to use a fraction of these monies to help hold prices? Yes, there's supposed to be a stabilization fund. Why is government not taking advantage of that? So we are exporting, we are getting some money abroad, but it still looks like we are not getting a fine understanding as in what is happening to our revenues from export and what we are using. If you look at the Bank of Ghana data again, in terms of imports, oil imports, it's gone down a little bit, but that clarity is still raising a lot of questions.
Of the Ghana cedi, to wrap up, this afternoon's edition of The Marketplace. It's been great having you on board, and hope you join us again same time tomorrow. My name is Emmanuel Abdaji. We are free. Have a good afternoon.